So what would be the accounting entries? First, on opening of a bank account. Very logical, we don't need to look into this. When money comes into the bank, we put money into the bank receives the money, bank account is debited. And who brings in the money? The co-venturers bring in the money. Therefore, co-venturers accounts are credited. Suppose Akash brings in 1 lakh and Vikash brings in 2 lakhs. What would be the entry? Entry would be joint bank account debit 3 lakh. To Akash, 1 lakh. To Vikash, 2 lakh. Simple entry, very logical. But only thing we need to remember is what are the accounts involved. One is a joint venture account, one is a joint bank account, and one is the personal accounts of the co-venturers. Next, what is the possibility? Expenses. We have to buy materials, we have to pay rent maybe, we have to buy some kind of equipment. Any expense paid, I repeat, there is no differentiation between capital and revenue. Whenever money is spent for anything, we do not open a rent account, a salary account, a stationery account, etc., 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 because we know that this joint venture is for a short period of time. We don't have to make analysis of the heads of expenses. Any expense, any money spent is just simply debited to the joint venture account. We don't have any separate expense account. We do not have any separate asset account. So, if materials are purchased and a check is issued from the bank, then your entry would be joint venture account debit. Any expense, debit joint venture to joint bank account since money is moving out of the bank. If you purchase machinery too, it would be joint venture account debit to joint bank account. So expenses paid out of the bank, I just mentioned here whether it's for materials or it is for machinery or it is for rent, whatever. All three are different. Everything would be debited to joint venture account. Next, it may so happen that the co-venturers meet some expenses themselves. Let us say Akash buys materials himself and brings it for the joint venture. In such a case, since it's an expense of the joint venture account would be debited. And what would be credited? Since Akash brings the money, Akash's account is credited. The credit to Akash's account indicates that money is ultimately we have to repay him or reimburse him for these expenses. It's the liability of the joint venture to Akash. So, expenses are paid or materials are brought by the co-venturer, joint venture account debit to co-venturer. For sale, when there is sale and payment is received in cash or it may be in shares, assuming that this cash is deposited into the bank, the cash is received in the form of check and is deposited into the bank, then it would be a joint bank account debit. And what is credited? Since it's an income of the venture, we credit joint venture account. We don't have a separate sales account. We don't have a separate income account, commission account. We just credit joint venture. Any expense debit to joint venture, any income, whether it be sales, commission, any other income, we simply credit joint venture account. So, joint bank account debit to joint venture is our entry. Sometimes, if the joint venture, if a project is being done for a company, it is quite possible that the company pays compensation, pays income in the form of shares of the company. In such a case, we may open an account called shares account, shares of that particular company account. This is because these shares normally, if they are received by the co-venturers, they would be sold, cash realized, and this cash would be distributed among the co-venturers. The sale of the shares may be at a profit and may be at a loss. If the sale is at a profit, the joint venture account, sale of shares is at a profit, the joint venture account is credited. If it is at a loss, joint venture account would be debited. We shall take an example with shares and discuss in detail. If payment is received by the co-venturers personally, suppose and some income is received actually by Bikash. It's not deposited into the bank but is personally received by Bikash. In that case, since Bikash receives the money, Bikash's account is debited. Bikash's account is debited to joint venture. So whoever receives, whichever co-venturer receives the money personally, his account is debited and joint venture account is credited. Why is joint venture account credited? Because it is an income of the joint venture. Ultimately, after having done all this, the balancing figure in the joint venture account would be the profit or loss. This is usually a balancing figure. If it is a profit, it would mean that the credit side of the joint venture is more, and therefore as a closing entry, we debit joint venture and credit co-venturer's account. So a profit is credited to the co-venturer's account, and if it is a loss, it would be debited to the co-venturer's account. So for loss on joint venture, co-venturer's account would be debited to joint venture. So when there is a loss, capital accounts are debited. By the same logic, co-venturer's account is debited and joint venture account is credited because we are closing the joint venture account. It's a balancing figure wherein the debits were more, the expenses were more, there was a loss, and to close the account, we credit the joint venture account, debit co-venturer's account. Finally, the joint bank account would have to be closed. So it would be closed by transfer to the co-venturer's account. Akash's account debit, Vikash's account debit. Depends, it could be 2 lakh, it could be 5 lakh, 6 lakh, depending. We would know it from the co-venturers, from the balancing figure in the co-venturers accounts. Co-venturers account debit to bank. With this, all accounts will stand closed. The balance in the joint bank account would be exactly equal to the total of the balances in the co-venturers account. Of course, joint bank would probably have a debit balance saying that there is cash in the bank, and co-venturers accounts would probably be a credit balance indicating that money is to be paid to them. Finally, when we pay off the money to the co-venturers account, closing the co-venturers account, the joint bank account also gets closed. With this, all accounts are closed. A quick revision, what are the possibilities? First and foremost, a bank account is opened. Entry is bank to capital. Therefore, we say joint bank account debit to co-venturers account with whatever money is brought in by each co-venturer. When expenses are paid from the bank account, I repeat, when we talk of expenses, there is no differentiation between an expense and an asset. There is nothing as a revenue and capital. Whatever money is spent for the joint venture is debited to the joint venture account. So joint venture account debit to joint bank if check is issued for meeting of expenses, buying of machinery, buying of material, buying of equipment, payment of salaries, payment of rent, etc., etc. Whatever payments are made, if it is by issue of check from the joint bank, then it is joint venture account debit to joint bank. If these expenses are met by any co-venturer personally, then it is joint venture account debit to co-venturer's account. Next, for the sale. In case of sale and payment is received and deposited into the bank, then joint bank account debit to joint venture. If we receive shares of a company as compensation, as income for joint venture, then we do open an account, shares of company account debit to joint venture. We have not mentioned the sale entry, but if these shares are sold, when these shares are sold, the entry would be joint bank account debit, assuming the money is deposited into the bank account, joint bank account debit with the amount received to shares shares of company to shares account with the book value, any difference is taken to joint venture account. For example, if we got shares worth rupees 1 lakh and we sold them for 1,10,000, joint bank account would be debited for 1,10,000. Shares value is 1 lakh. The difference, the profit of 10,000 is credited to joint venture account. If there is a loss, joint venture account would be debited. If any payment, any income is received by the co-venturers personally, co-venture account debit to joint venture. The balancing figure ultimately the joint venture would indicate profit or loss. A credit balance in the joint venture account indicates profit. Therefore, to close the account, we debit joint venture to co-venturers account with profit on joint venture. In case of loss, co-venturers account debit to joint venture. And finally, the joint bank account is closed by transfer of the proceeds to the co-venturers account. Entry would be co-venturers account debit to joint bank account, depending on the balance which is payable to each co-venturer.